Hey folks, how are you all? A very warm welcome and propelled. So a situation comes in, we apply for education loan, give it to our banks and are awaiting for approvals and harshly tell us that you're not eligible for this particular loan. Why? Because you do not fit in the minimum family income requirement. What is this minimum family income requirement? Something that is very crucial for any loan, be it education loan or any other loan. So stick till the end because I'm going to tell you everything in length and breadth about minimum family income requirement. So minimum family income refers to the least required income level for a student's family to qualify for an education loan. Some points are critical in deciding minimum family income. The first is lender's assessment. Financial institutions assess a family's financial stability before approving any loan, with minimum family income being a key factor over there. Now, talking about the loan eligibility criteria, lenders establish specific criteria for loan approvals, including a minimum family income threshold, which varies among the institutions. Then they assess the risk. So higher family income may indicate a lower risk for the lender in terms of loan repayments. So if a family's income is below the minimum threshold, lenders might require a co-borrower or guarantor with a higher income to actually co-sign that particular loan, sharing the responsibility for the repayment. Now, minimum family income helps lenders to evaluate whether the family can meet monthly repayment obligations without significant financial strains on them. Students and families should therefore carefully examine and review the loan terms, including income requirements, interest rates, and repayment terms. That's essential. Each financial institution has its own eligibility criteria, making it essential for the applicants to check with the lender for accurate and up-to-date information. Let's talk about the regulations in case you are not able to meet the minimum family income requirement. So, as I already told you, some lenders may allow a co-borrower or guarantor with higher income to support your loan application. The co-borrower or the guarantor takes joint responsibility for repayment of the loan. Also, providing collateral or security such as property or investment may increase the chances of loan approval. Secured loans carry lower risk for the lenders and they may be more willing to lend even if the borrower's income is below the minimum requirement. Also, if the borrower has alternative sources of income such as rental income or freelance work, these can be considered during the loan application process as well. So in some cases, government-sponsored education loan schemes may have more flexible eligibility criteria as well. So you must explore government schemes. Exploring these schemes offered by nationalized banks or financial institutions that actually cater to students from diverse financial backgrounds can really help. Even the part-time employment. So some lenders may consider your part-time employment income so that that family income is actually met, that's being put in the schematic norms. Negotiations and communications with the lender to discuss the situation, explore possible solutions can be a best solution over here. So lenders may be open to negotiating terms or finding alternative ways to secure the loan because ultimate aim is repayment and not your income. But in some situations, your lender may be rigid. So in that particular case, you may consider different lenders that have the varying eligibility criteria over here. So you need to research and consider approaching multiple lenders. Find one that befits your minimum family requirement criteria and align more closely with borrower's financial situation. Or you can also explore some scholarships or grants that can help reduce the overall financial burden. So as I already told you, the minimum family income significantly impacts loan approval, particularly for education loans. So risk assessment, loan eligibility, co-borrower or guarantor are some other factors that will be impacted if minimum family income criteria is considered. So higher the income, less chances of your loan rejections. Higher the income, your loan is eligible. Higher the income, co-borrower or guarantor is not required, and interest rates and loan amount will be on the better side. So interest rates will be lower, loan amount can be increased. So adequate family income also ensures that borrower can meet the monthly repayments comfortably. The family income along with credit history impacts the borrower's creditworthiness as well. Higher family income may provide flexibility in negotiating favorable loan terms in your favor too. Not meeting minimum family income criteria can be a trouble. So what to do? Let me give you some tips that can help you combat with this minimum family income criteria. Number one, try to explore part-time work or internships that will increase your income, and additional income can be generated via that. Secondly, consider including a co-borrower or guarantor that has a higher income. Highlight rental incomes or other sources of income your family may be having. So showing additional income sources really help. Maintain a good credit score by managing debts responsibly. This is also going to really help in your loan process. Even the negotiations with the lender can help over here. So discuss flexible terms or co-borrower arrangements with the lender. This discussion can really help, trust me. Explore the government-sponsored education loan schemes and apply for scholarships or grants. So if you're exploring the government-sponsored education loan schemes, that can really help you with the interest part, and certainly your family income criteria can be met via that particular part. You can also ensure all financial documents are accurate and up to date. So if financial documents are accurate and up to date, then lender may consider your family income criteria and they may not be giving that weightage to that particular part. If feasible, offer collateral or security to increase the loan approval chances as well. One more crucial tip from my side: choose lenders wisely. Research lenders with criteria that align to your financial situation. Open communication is the final tip and a very, very crucial one. Communicate openly with the lender to address concerns and find solutions, because many times we do not speak and things don't happen. This is all from my side in this particular episode. In next episode, we're going to talk something that is very relevant to you and associated with education loans. Stick on